So now the member deposits rates, that is interest rate, and the share capital dividends are some of the key things to consider. Look at the consistency of a SACCO in paying out the dividends and the interest rates. Mostly, they are referred to as dividends. Most of the times, they'll be referred to by one name, dividends. And you'll know when there are dividend payouts. That happens mostly at the start of the year when they pay the dividends for the previous year. So those are key factors that you should consider as you decide whether or not you need a SACCO, and importantly, to which SACCO do you belong. Some people, because of their nature of work, like policemen, like teachers, they belong to certain SACCOs, not by choice as much, but because this is where they have what we called guarantors. They have people in the same profession who can help guarantee them. That is if there is a need. Because again, when they have pay slips, also becomes easier to operate from that point. Yes, so now we now know the difference between member deposits and share capital, and we know now share capital, because it's mostly it's actually non-refundable, only transferable or sellable to another party. Most people have not invested in it. You know, our investment culture, our decision culture as Africans, as Kenyans, we will be like, okay, what if I need to withdraw my money? How do I get my money back? But remember, it's earning you a high interest rate, which is a dividend rate. So that is something also to look at. Just like you'll invest in, it's a very long-term investment actually. And member deposits are withdrawable. So that's why most people choose to put less money in the share capital and more money in the member deposits, so that whenever they need to use that money, they are liquid without much hassle. Okay, and now I'll take us to the purpose of SACCO so that we also understand, just very briefly again, because I'm not teaching you or lecturing you on the purpose of SACCOs ideally, but we have 3-4 key purposes of why we have SACCOs. So the name SACCO is an abbreviation or an acronym for it's Savings and Credit Cooperative SACCO. Cooperatives, yes. Yeah, so they're cooperatives, and we have many cooperatives. They are under the Ministry of Cooperatives. We have deposit-taking SACCOs. We have non-deposit-taking SACCOs, that is NDT and DT SACCOs. Most SACCOs you'll see they are written XNX DT SACCO. We have their purpose is savings, as is clear from the name. We have savings. We also have credit, of course, which is actually savings and credit are the key and the core points of SACCOs. And we also have, most SACCOs have introduced insurance. So they are also insuring, they are starting to realize that our members are not insured, say their milk, their cows, because when we advance a loan that is pegged on the daily output of a member, then we have no control. We have no control over that member's daily outcome, or cows. You know, if something happens to their cows, we lose our interest, we lose our capital, our principal amount. So this is why SACCOs have also shifted to insurance, so that they offer insurance to members based on the product they have, the service they are offering. And a final one is not a final, but another common one is investment. So SACCOs also aid in investment. They provide investment opportunities for members. So apart from just investing in the common, just saving in the common current account, we also have investment opportunities. Some of these also, when you save your money in fixed deposits, for instance, fixed accounts, that also earns you an amount. And usually, I was listening to some podcast, and someone said, they put their money and they didn't ask after they've deposited. They put their money and fixed it on that account. That's when they were asking, so where do you take this money? How do you invest this money? You see, that is, you should start by you knowing. That's why you need to understand your SACCO. start by understanding where does this SACCO invest, and then you can become a member of that SACCO. So that as you invest, as you save, as you put your money in whatever account, you know how your income, how your interest, how your profit is going to be generated. Those are key determinants. They say that if you want to hide something from an African, put it in writing. Also, make sure that you ask these questions, ask all these questions, because this is not information that will be given freely. When you walk into a SACCO and approach the customer service desk, you will just be answered what you ask. Most of the time, not unless they are really out, they'll not go beyond the scope. And that's why it's good to get your information and then go with the facts, understand before you make that decision. Okay, so we've looked at some of the key things that SACCOs do. Now, regulation of SACCOs, another thing, because some people will say, I can't belong to a SACCO because you imagine it's a lower class level of banking, which is it's not the case. It may have started from that, but it's not the case. I want to argue that it's not the case, because we have these village SACCOs, community SACCOs, and it gives the illusion that it's the same thing. It's like table banking. It's like, merry-go-round. No, it's very different. It is regulated, but it's regulated differently when you compare to banks. So banks are regulated by the CBK in every country, the central bank of whichever country. SACCOs also have a government-owned regulator, which is called SASRA. So SASRA is the SACCO Society Regulating Authority. Yes, if I'm not wrong. So SASRA. So SASRA regulates SACCOs as well. When bank interest rates go up, you wake up one morning and they're giving loans at 18.5%, at 21%. That has been set by the CBK maybe at 14%. Sometimes they're given an upper limit, but you see, banks also have to some extent the free will to range their products and value them and price them at very varying rates, which is a high cost, honestly. So SACCOs, yes, they do offer affordable loans. I wouldn't want to call them cheap loans, but they are affordable because, again, remember we said the concept is financial inclusion. So they are regulated, but their regulation is not as stiff as banks. So they have a very high level of autonomy, actually. You'll find that we have interest rates that have remained the same for decades. In SACCOs, okay, decades is a bit exaggerating, but we have interest rates that have remained the same for a decade. I'm sure about that, maybe more, maybe less. And this is one of the major differences also. They are a bit reliable in terms of rates. I know we have a debate around their sustainability, and this is introducing us to the other thing that I want us to talk about around the government wanting to come in and regulate, because we have the fear around SACCOs, the sustainability. How will they be sustained? How can I trust that if I invest my money, if I deposit my share capital that is non-withdrawable, non-refundable, I will be able to recover from that money before the SACCO, if it does, collapses. And hopefully your SACCO doesn't collapse, because the government is trying to come in. I'm not saying that is a good thing. I don't know how it will turn out. I'm also looking out. I'm also trying to further understand how that is going to work out. But I think as someone who is keen, especially if you're in that space, and also if you've not gotten in there and are thinking of getting in the SACCO space, it is important that you understand what is happening, that you follow up so that you know whether or not you should belong. And also another thing, SACCOs are trying to lean more on risk-based lending. It's still a new concept, but it will definitely catch up. And this is where our sponsors for this show, that is YFS Analytics, come in, because this is an organization, this is a company that does analytics, because whether we like it or not, in SACCOs, we will have to lean towards scoring using data. That is non-negotiable. And very interestingly, we have a lot of data in SACCOs, very rich data, but then to be able to come up with even better outcomes using the data that is owned in SACCOs, we need to be able to collect better data as SACCOs. And I'm saying we because I am an advocate in the area of SACCOs for financial inclusivity or for financial inclusion. We need to reach everyone. Where we have data scarce areas, where we have a lot of data, we have so many people who are still unreached, and this is why we have this. We want to understand the evolution of SACCOs, the regulation of SACCOs, and how credit operates and works in SACCOs. So we have the risk-based lending, a concept that is quickly catching up. It will, with time, slow maybe, but for sure it will. This is where like banks have applied scoring you with as a potential borrower or as a borrower based on some of the some key factors, like we have the Kesonia, which is a rate that is given about every month by banks, and then we also have your credit rating. We have their rates, like their charges, like insurance, processing fee, and other factors that they look at, which is also something that I will be talking about. They use this to rate you, so your rate is going to be different. Actually, not it is already different. It's already being done. If you walk into a bank today, your friend, you will find that your rate is very different because of your behavior, borrowing behavior, because of your performance in other areas. And this is something that is also proposed by the Cooperative Ministry to take place in SACCOs. And to conclude this episode, let me note that your saving behavior is commensurate to, your eligibility and how you qualify for a loan, how much you qualify for, what interest rate you will get the loan at, is all commensurate to your saving habit, your saving culture, and also your saving and borrowing culture. I'll let you know that SACCOs do not prefer people who, even banks actually, do not prefer people who will just save and save. It looks like you're trying to prove a point. It's important to save wisely. That means save, show this money is being put to some good use. That means withdraw, just play around your account, but wisely. And I'll talk about how to become a strategic borrower also. So that behavior will determine what kind of a candidate you are when it comes to loan advancement. Yes, which is very important, because when they say they're looking at data, or when they say they are trying to do risk-based lending, that is an important factor that they'll be looking at. What is your behavior around money, and particularly backed by data? So either data that is held by that SACCO, or data that is held somewhere else. Like you'll hear them ask for financial statements from either M-Pesa, other institutions that you have banked with. That is very important. How you behave around money, how your money behaves in that SACCO is very important. And I think that brings us to the end of this episode. And I'd also like to get your questions once again and your opinion, so that I'm able to answer better on whether or not. I hope this has helped someone, and if not, then your questions, the other questions that you have around whether or not, could be dropped in the comment in whatever platform you're watching this from, so that we are able to address them. Thank you so much, and stay tuned for our third episode of the series, Understanding SACCO Credit. Thank you.